Have you ever wondered how the stock market works? Let's break it down. The stock market is like a colossal, buzzing marketplace. But instead of buying and selling goods, people trade company shares. Companies issue these shares, essentially pieces of their business, to raise funds for growth and expansion. When you buy a share, you're buying a slice of that company, becoming a part owner, if you will. The value of these shares, the share price, fluctuates based on supply and demand. If a company is doing well and investors believe it will continue to grow, demand for its shares goes up, pushing the share price higher. Conversely, if a company is struggling or investors believe it will, demand falls and so does the share price. Investors make money by selling shares at a higher price than they bought them, capitalizing on these price fluctuations. Now that you've got a basic understanding of what the stock market is, let's move on to some essential trading terminology. Trading can seem like a foreign language if you're not familiar with the terminology. But don't worry, we'll break it down. A bid is the price a buyer is willing to pay for a security, while an ask is the price a seller wants for that security. The difference between the two is known as the spread. Now let's get a little wild. Bull market and bear market are terms derived from the way these animals attack. A bull thrusts its horns up, symbolizing a rising market. Conversely, a bear swipes down, indicating a falling market. And then there's dividends. This term might make you envision a slice of a delicious pie, and you're not far off. Dividends are a portion of a company's earnings, paid out to its shareholders. With this trading vocabulary under your belt, you're already on your way to becoming a savvy trader. Up next, we'll explore some basic analysis techniques. When it comes to trading, one essential skill is being able to analyze the market effectively. This is where fundamental analysis comes into play. It's a technique that traders use to evaluate a company's intrinsic value. Think of it as peeling back the layers of an onion to understand what's really at the core of a business. Now you might be wondering, how does one do that? Well, it's all about understanding a company's financial statements. These documents tell you about a company's assets, liabilities, revenue, and earnings. They offer insights into a company's financial health and potential for future growth. But it doesn't stop there. Fundamental analysis also involves interpreting economic indicators. These include factors like inflation rates, unemployment levels, and changes in gross domestic product. Such elements can significantly influence a company's performance. Fundamental analysis is just one piece of the puzzle. Now we'll delve into the world of technical analysis. While fundamental analysis looks at a company's value, technical analysis focuses on price movements. Now, let's delve into technical analysis. This technique is like reading the footprints of the market. Consider a chart pattern, which is a visual representation of price movements. It's like a map that traders use to anticipate potential price directions. For example, a head and shoulders pattern could signal a potential market reversal. Then we have trends. In the simplest terms, an upward trend indicates that prices are generally increasing, while a downward trend suggests that prices are falling. Lastly, we have indicators. These are mathematical calculations based on a security's price and volume. They help traders identify where the price could be heading. Some of the popular ones include moving averages and relative strength index. With these analysis techniques, you're well equipped to make informed trading decisions, but remember, there's always more to learn. So, you've taken your first steps into the world of trading, but remember, this is just the beginning. The realm of trading is a vast, ever-evolving landscape where the only constant is change. To navigate this dynamic world successfully, continuous learning and practice is not just an option, it's a necessity. The fundamentals of the stock market, the essential trading terminology, and the basic analysis techniques that we've covered today are merely the tip of the iceberg. As you delve deeper, you'll encounter more advanced topics, complex strategies, and new challenges. Don't be daunted. Embrace them. Each challenge is an opportunity to grow, to refine your skills, and to deepen your understanding of trading. Remember, the journey of 1,000 miles begins with a single step. You've taken that step today. This is your first step towards mastering the art of trading. Remember, every expert was once a beginner. So, get ready to embark on a path of financial growth and trading expertise.